It's an 80-point up move that you're seeing on the index, 83 points now, 90 points higher. So, yes, the pullback has come through.
So right now, up about 65 points on the Nifty. The sensex has gained 228 points.
Still, we are up around 90-odd points, and that is a good gain going by what we saw in the global markets as well.
17,100 is where we are at. Now, 120 points higher is where we're going to finally end the day at, which is not a bad outcome at all. Yesterday's high was 17,066, and we're ending about 50 points on top of that.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about the 6 hours of the day's trading action in 5 headlines. I'm Reema Tendulkar and these are the top headlines. Indian markets see a relief rally buoyed by positive global cues. Both Sensex and the Nifty gain about a percentage point each, with financials leading the pack. Mid-caps rise in tandem with the blue chips. The competition in the telecom space heats up. Bharti Airtel counters Jio's latest postpaid offering by introducing new entry-level tariffs for its postpaid family plans. The telco aims to use the new lower price point to pull cost-conscious customers and migrate some prepaid users. Reliance gains 3% after brokerage CLSA says the stock is a bargain buy with a 35% upside. The brokerage believes its possible IPOs in Jio or retail will support going forward. HDFC AMC rallies after GQG Partners sells its stake. PVR clocks gains after Warburg Pincus exits. Meanwhile, UTI AMC gains after PPFAS buys a large block. All 10 Adani Group stocks rise in trade as GQG Partners CEO Rajiv Jain says it would be a mistake for the company to pause growth plans over debt concerns raised by investors, adds that their $2 billion debt on the group is not risky. And here's a lineup of what we have for you in store today in Market Opinions. Sanjeev Mukim of JP Morgan and Arvind Sanger of Geosphere Capital Management. And the corporate voice on the show today is Rajiv Jain of GQG Partners and also Keki Mistry of HDFC. But before we get to that, here is a look at the day's market action. A relief rally on Dalal Street saw the Nifty and the Sensex end over 0.5% in the green. Financials led from the front with the Nifty Bank seeing gains of close to 1.5%. BSE companies gained a market capitalization of close to 1.5 lakh crore rupees. Prashant is here with all the action.
It was a volatile session, but by close, there was 100-plus points in the Nifty to show for it. Through the course of the day, we had many 30, 40, 50-point sell-offs, bounces, at least 6, 7 of them before the close, which gave us that bounce. The banks did even better, the Bank Nifty that is, and both private and public sector part of the banking index participated with equal amount of vigor. But sectorally, if there was one space, it was the oil and gas index which did well, and I'll come to the why in just a bit. Mid-caps and small caps as sectors in the broader market also doing decently okay. Reliance was that one reason, 3% pop. It's been underperforming the rest of the market in this sell-off episode of the market, and it did do a little better. There were lots of upgrades, basically pointing out that the stock is actually now cheap. HDFC Life, SBI Life, actually insurance companies did well. The other underperformer has been Bajaj Finance last year and so far this year as well. That saw some sort of bids emerge. Bajaj Auto and Axis Bank are the other large Nifty names which did okay. Cuts coming through on the Nifty in HUL, Power Grid and Britannia, which lost a little bit. Market breadth was positive, not as positive as in the early part of the day. But Aarti Drugs, Adani Green, the asset management companies, HDFC, AMC, UTI, AMC did well. Stovecraft, SW Solar, CSB Bank, Gland, Sequent were some of the other gainers in the broader space. Gale was down in the mid-cap space, LTTS, and you also had Fortis, which was lower. Now, banks have outperformed the Nifty, so that's the index to watch out for in terms of looking for leadership. The Nifty itself needs to cross the 17,200 level to call it, for some more confidence to come back, for one to call a bit of a short-term reversal here. And of course, global market headlines will be very important. Tomorrow, later in the evening, we get the Fed decision, which is going to be very keenly watched and which should set the tone for the rest of the week. Back to you.
Thank you very much for that. Let's get to the market opinion then. Sanjay Mukim of JP Morgan says the valuations in the Indian markets have caught up with global peers. Meanwhile, Arvind Sanger of Geosphere Capital Management says the US banking crisis will impact Indian banks as well. Listen in.
Well, of course, this has become a very macro market, and India, as I argued in one of my notes recently, we've kind of given up all the premiums we'd earned in 2022 over the S&P or over, let's say, EM, so in relative valuation terms. So India is now back in line with averages to the rest of the world. Even today, despite the fact that, valuations have become a little bit more comfortable, the potential downsides are still fairly large. We have been cautious for a while, and we continue to remain with that sort of an outlook. And the reason is this is very vulnerable to developments in global banks. It's a proxy in the Indian market to the BFSI space, as we know.
The banking system in the US doesn't have an asset problem in the sense that their loans are fine. There is no loan crisis. Their government bonds have lost value, but if they're held to maturity, they're money good, right? The US government treasuries are not going to be a problem. So the problem lies on the liability side. And so I think the solution lies, which has been now talked about for the last day or two, is in guaranteeing a broader set of deposits. So this global crisis on deposit side is not something that has any India echo in it.
Let's get to the second headline for the day, and the competition in the telecom space is heating up. Bharti Airtel has countered Jio's latest postpaid offering by introducing new entry-level tariffs for the postpaid family plans. So Airtel has introduced a newer plan that's 599 rupees, where along with your existing SIM, you get an additional SIM, which is why they're calling it for family, because you have two SIMs coming for 599, and this is postpaid. Now, this is in response to Reliance Jio, who last week had come out with various postpaid plans with OTT connections, without OTT connections, to try and increase their postpaid base. And now Reliance Jio has also come out with such an offering. In the past, Bharti Airtel had postpaid offerings, but their plan was 999, wherein you got 4 SIM cards. But now if you want a more, a cheaper variant of that for a more cost-conscious customer with, say, just 2 people, then that 999 plan didn't work. So for that, Bharti Airtel has introduced a new variant. They've also come up with some bunch of options in the Black variant, Airtel Black variant, wherein you get not just postpaid, but you also get D2H, you also get broadband. So they're just introducing more plans which cater to different price points, different segments of the customer base, to try and increase its postpaid base and perhaps try and convert or might get their existing prepaid customers to migrate into postpaid. So that's Reliance, that's Bharti Airtel for you, and the stock was up close to about 0.3%. Let's get to the third headline then. Big boy Reliance is one of today's top Nifty gainers on the back of a positive note from CLSA, which says the stock is a bargain buy. The brokerage has a target price of 2,970 and the stock expects a 35% upside to the current price. Excuse me. According to CLSA, the company's big triggers for 2024 are the launch of Jio's 5G smartphone and the possibility of a Jio or a retail IPO. Phoenix Mills was also in focus today after Motilal Oswal Financial initiated coverage on the stock with a buy rating. Sonal is here with more on that. Sonal.
That's right. Motilal Oswal Financial Services, it's bullish on Phoenix Mills, came out with a report. It's an initiating coverage where they talk about the expansion strategy of the company, which will aid their rental growth going forward as well. As of March 2023, Phoenix Mills has 11 operational malls with a leasable area of 9 million square feet, and companies in an expansion phase. They recently acquired a land at Surat as well to develop a retail mall of 1 million square feet. This is by FY27. With this expansion, MOSL says the company will have presence in 6 out of top 8 cities and 3 tier 2 cities as well. And so far, company has seen a pre-leasing of around 90% for all its malls, and that's a good number. The rental income thereby is expected to increase by 32%. That's a CAGR growth between FY23 to FY25 to 2,200 crore rupees. They value the retail and the office assets at a cap rate of 7 to 9%. The hotel assets are also doing well according to Motilal Oswal, and that is valued at 15 to 17.5 times September 24 EBITDA. So that is the expectation in terms of what the valuations could be for all the assets put together. And the company has a plan to add 1 million square feet of retail asset every year, and that is something which will propel growth for the company as well. They say in 2 years the stock price could be at around 2,000 rupees per share. The current target price that they have on the stock is 1,700 rupees per share, and they have a buy rating on the stock as well.
Thank you very much for that. 1700 is the target price. Get into a break. On the other side, we'll be back in a jiffy with the other headlines.